It's so nice. It's so euphoric. The market just like rips to the upside. But then you have this whole like slow bleeding death, basically, into the abyss of crypto. And I wanted to get rid of this. It was making me sick, right? I was like holding coins all the way down. It took me a while to realize like what's blocking me from locking in those gains. Why do I have such a problem with selling my crypto? It became really clear to me that I had to automate things. And so this is when I started in 2020, and I started preparing my first algorithms for crypto. So trading algorithms, right? I did not want to invest manually anymore. I wanted to have some fixed rules that would run 24/7, monitor the market for me, take the decisions, and just send me a report. That's it. I just felt so much better as soon as I started implementing this. And my first algos, like, don't get me wrong, they were super basic. You start walking before you start running or jumping. That's what I did. So it was a simple crossover, basically like a slow moving average and a fast moving average, right? And typically what we see is that when they cross over, the fast crosses over the slow moving average, then it's typically a sign that we have bottomed. So I started doing this on very big time frames, like the weekly or the daily. So I would be in trades anywhere from 3 months to 12 months. That would be the duration of my trades, right? But at least it was automated. And I was like, okay, I have a rule to get in, I have a rule to get out. And so that's what I did with a couple of coins. And I can give you some examples. So 2021 was like insane. Trend following, you know, it basically, it did anywhere from 2x to 100x. So my biggest return with these strategies, simple trend following on a daily time frame, I had 150x, which was 50x return. I 50x my money in 1 year. It was Solana. And 100x was Matic. I started going more into the lower time frames because the trend following approach, especially on the daily time frame, for example, which is like a very slow time frame, right? The problem is you don't get out at the top. So you do end up giving away like 30-40% of your floating profit. So like, for example, not on Matic, but on Solana, I was up 100x in 2021. But then I was like, okay, I'm holding because my algorithm is telling me to hold, and I gave away like about half of my profit. I wanted my 100x on Solana, you know, I didn't want a 50x, I wanted 100x. And so I look into how can I exit earlier, started creating more rules, and I actually created my first indicator just by like doing all this research on creating my own signals. So that was the birth of my first indicator. And then the second one, and then the third one. And I was always trying to create these indicators in a way that they were as uncorrelated as possible. There's two parts of, you know, I would say the architecture of our models, right? And especially the fund allocation. So there's the model selection, right? So it's like a rebalancing. So we'll look at the past 7 days. And if one algorithm in the past 7 days, one model, is outperforming the other models by a certain threshold, then we're going to allocate, again, automatically, we're going to take funds from the other models and allocate more to this one because it's the hot horse, right? So let's say it's like a trend following model. It's performing really well. Well, we're going to give it more fuel. It's also valid on the other side. So when we're in a sideways market, a trend following algorithm is not going to perform. It's actually going to get wrecked. So this is for like, capital allocation. And then we have the coin selection. So which coin should we trade? The way to identify these opportunities, these like a fast moving horse, is to measure their volume per market cap ratio. Because look, if you have a small market cap, right? But the volume is like as high as the volume you get on, let's say, Bitcoin. And sometimes it happens. Sometimes you get more volume that's traded on a shitcoin than Bitcoin, but the market cap is like 100x lower. So what does that create? That creates 100x more volatility. That's all we want. We want volatility. this is how we select our coin. So we always trade like Bitcoin, Ethereum, you know, the less volatile coins, of course. But whenever we spot this volatility, the models are optimized for these really volatile markets. They're going to trade this coin for that very day. But the only reason why we trade crypto still is because by far, with these algorithms, we're getting the best returns. Like we're talking, you know, I can deploy a trading model on a Tesla stock or Apple stock. It's going to return maybe 20% a year. But if I deploy this same model on a shitcoin, super volatile shitcoin or meme coin, right? It's going to be 4-5 times that. Kronos started to look like a fund, right? So I started with indicators, but then like automating the trading of these indicators. And so it started to look like a fund. And what do you do when you have a trading fund or like a hedge fund? Well, you want to raise capital. Essentially, I was targeting high net worth people. And usually when you find like one high net worth individual, then he knows another, then he knows another, and so on and so forth. But the thing is, like, getting your first investor is really difficult. The way I started was actually targeting poker players. These people were, but I'm talking about like the really successful poker players. And a lot of these guys, like they have a bigger, like much bigger risk appetite. So when I was telling them about crypto and telling them that my goal was to make anywhere from 70 to 100+% a year, they actually like they paid attention. I started also like digging into the family offices route. And so I found a lead. And that was my first really big account. When I say really big, is like more than 7 figures. They saw the potential of crypto. They wanted basically a 5% exposure of their total allocation. They wanted to go into Bitcoin. But I was telling them like, hey, look, I can outperform Bitcoin and minimize your downside. So let's say Bitcoin, especially in 2022, Bitcoin is just going down and down and down. So they were like, okay, well, that's enticing. You know, if this guy is telling me that he can, even if he can return the same thing as Bitcoin, which is, you know, around 20% now, 30% a year, but while like keeping the max drawdown around 10%, they loved it. Okay, they were sold. I got my first family office, and then I finally started like, okay, like I made it. I was getting tons of requests from people from smaller money. And at the beginning, I was telling them like, no, sorry, we're not ready to like scale the amount of accounts that we trade. The infrastructure was a problem at that time, right? I could not onboard like 1,000 clients overnight. It wasn't possible. Now today it's possible, but it wasn't at that time. And so what I started to do at that time was I started taking some of the profit that I was making from, you know, my hedge fund, running the hedge fund, and I invested it into creating our own infrastructure. So our own platform where, you know, you plug in your API key, but basically you connect your exchange to our platform. The algorithms would run the trades, but that's it. We can only buy and sell assets. So, you know, we cannot withdraw the liquidity, nothing. So whenever, for example, if you're interested in Kronos, right, you want to acquire Kronos or you want to learn more about it, we'll literally show you what's under the hood. Like we're not going to tell you, of course, how we get our signals because this is proprietary, but showing you all the trades that it's taking live on screen, we're going to do that 100%. That's what we do. So you can basically audit the system and try to go to a hedge fund and ask them to see their history of trades, to see their signals like live on a screen. I mean, they will tell you to F off. And also one last thing that's really important is it's very few hedge funds that run with an API key system. So that runs basically that connect to your account. It's still very rare. And I think it goes a long way to like say why. There's tons of smaller hedge funds. They don't get any audits of their trades, but like your money is there. It's with them. You don't know how they trade. You don't know even if they're into a trade, right? So you just take their word as like the truth. That's it. Like, okay, you returned like 3% last month. Sure. And so we're able to show you this, like every trades, what it did, how it works, the returns that each of these models, got in the past month, even since 2022. We show you everything on screen. I've always wanted to be as transparent as possible. I want to be a disruptor in this side of things.